good weekend, all. Ira Epstein with your weekend financial market update, and this is for November 30th, 2025. In terms of market action, at 7:45, we're going to get the S&P final U.S. manufacturing PMI for November. We'll get the ISM manufacturing data for November. And they're saying on the news that Fed Chair Powell will be speaking at 8 o'clock. I don't know where and why. Generally, the Fed members are all in a quiet period between the 2 weeks before the Fed meeting. So I'm a little surprised to hear that. Now, before I get too far, we are going to have our Cyber Week sale. I'll talk to you about this at the end of this, but it is 1/3 off everything on our website that are my subscriptions and my courses. But let's go back instead and look at the chart action first. Why don't we just go to the charts because they're the story. When you come to the S&P monthly charts, as you could see, the market down 1/4 point. Now, you would think because of all the activity you've had during the month, and it's been a pretty violent month, that it would have been different than that. But on a closing basis, you're just down 1/4 point. When we come to the weekly charts, you can see the market had been down pretty hard the week before. You see this. And then came back roaring this week with a 3.5%, 3.6% gain. When we take a look and you start looking at the weekly charts, I think you understand what I'm saying. When we step in over here, which is the end of the first week in November, the market had peaked out at the end of October, then fell pretty hard from the October, if we take a look at it, 69.53, all the way back to 65.25, and has since made a nice comeback in the market. In terms of the swing line, the trend is down. You have lower highs, lower lows. However, the momentum held at the 18-week average of closes, which is a bull sign. So the market was not able to stay under it. As you hear me say so often, markets like to determine from the 18-week average, should they be bullish or bearish going forward. The next step that I look at in the market is what do we have going through here? We have lower highs, lower lows. The market is fighting a battle right now, as I said, at the 18-week average. It peaked out, if we go back and look at the Bollinger Band against that, and that was the week, by the way, October 31st, ending there. And then we went into that volatile November period. And again, November's going to go down in the history books as one of the most volatile months. When we look at momentum, you had lost the bullish embedded reading. The market paid attention to all that. It fell back to the 18-week average, held it, and that's all it had to do. Now, it is still an overbought condition, so that would keep me on a weekly basis from telling clients to buy the market. That would be the retainer. I'd want to wait for a pullback and then go for the Santa Claus rally that I still think is going to happen. In the Dow, it's very similar. You had a market where you had the upside momentum. You lost it. The market corrected right into the 18-week average, held it. I don't expect it to just immediately go for new highs. Could it happen? Yes. Why? Because you've been unable to stay under this 18-week average, so you're keeping a bullish bias. The argument is the same in the Nasdaq. You went up from that high where you peaked out the end of October, had your big break into the 18-week average and held it as well. And in the Russell, you peaked out at the same time frame, pulled back, held the 18-week average in retrospect on a weekly chart, and now the question is, can it make new highs going into the end of the year? I'm of the opinion these markets can, because I think they're going to build in that a new Fed chair will be announced before Christmas, and the market's going to look at that person to be cutting interest rates rather aggressively. In the DAX, the market sank into the lower Bollinger Band a couple of times over the past 4 weeks. It has come back. Look for resistance at 44.34 right now. In the bonds and the notes, well, we're going to see the battleground, as you know, shape up here. You can see how the market's fighting at the 18-week average. What would hurt the market is getting under 2 weeks ago's low and then settling under that number. That could put you back to the 114. I'm not in that camp. I think the market's going to try to stay strong. The same in the 10-year notes. Now I'm looking at a bullish crossover. Can the 18-week average of closes, which, let me see if I can move this over so you can see it a little better here. I'm not on my normal computer, so as I work on these portables, it's a little bit harder for me. But you can see how close you're getting. And if you get that crossover, that's generally a bullish sign. And I would expect that you're going to quickly challenge the upper Bollinger Band. In the dollar index, the market, the key is not to get underneath 99.47. Now, one of the parts of me, when I look back and I say, okay, if I think interest rates are going to get a new Fed chair that's going to be aggressive and make more cuts, trying to shore up the labor market while they have to fight the inflation story, if it shows again, is that bullish the dollar? Typically not. So we'll see how that plays out. In the eurocurrency, I'll know I'm on the right track in that thinking only if you get up and over 116.57, because the European Central Bank seems to be signaling right now that they're not going to make a rate cut for the month of December. And that means if we make one and they don't, it generally will favor the way that I'm talking. In the Canadian dollar, we got down into an oversold condition. You got to bounce. It's still in a downtrend. It's not worth selling it into the 71.92 area because you're still too oversold. In the Japanese yen, I will say it over and over. I continue to look for one thing. I look for the Bank of Japan to try to intervene to save the yen. And on that, you want to test the bank. So you don't have to do it the day that they intervene, but probably within 72 hours, I believe the market will test the bank. That's assuming they intervene. They may not. In Bitcoin, was this the low of against the 100-week average? It certainly looks to me like a spot that if I had been a bear and short, that I'd have covered the shorts. Does that mean that it's time to go long? No, that's not what it's screaming. In retrospect, it might, but I'm not a bottom picker. I can make the argument to cover a short, but I can't make the argument to get long. When you look at the differential between the Brent and WTI, first off, OPEC had some meetings this weekend, and they are sticking with the idea that they're going to cut back production in early 2026 as they see the market now potentially getting oversupplied. Number two that they're talking is they want to find a mechanism, and they think they'll have it in place within the next 12 months, where they measure everybody's production to see overproduction, underproduction, a better way of keeping up with what they're doing. When you look at the chart action, it is bearish, lower highs, lower lows. When you look at WTI, American grade oil, lower highs, lower lows, still bearish but oversold. Heating oil has fallen all the way back to the neutral zone. Now that polar vortex that I had told you about earlier will hit the Midwest, and it's going to hit us probably on Thursday and Friday. They're already talking 10 degrees on those 2 days in the Chicago area. So once you get that, you know where you're at. Had this been January or so, you could be well below zero. It just, right now, we're still in the warmer part of all that. So you put it together, you come up with a game plan, as you can see, and I have one for you. Our Cyber Week sale. 1/3 off any of the monthly plans that we have. 1/3 off any of the 3-month plans that we have. And in addition, you can get the 1/3 off, off of my courses, 1 year subscription. If you're an account of ours, you get that. I mean, these are great deals if you're serious about trading, looking for my advice, where to buy, where to sell, and to follow me every day. Every trade I put out, I follow, whether it's a spider, a stock, an ETF, or a futures contract, from beginning to end every single day that I cover that. So I think you'll find the reasons why to enter, why to come out, where I'm wrong, where I'm right. Generally, there's a pretty tight stop on most of the trades. When they're embedded readings, we use momentum rather than a tight dollar stop. And we at least I have found that's a neat way to trade. In any case, I'm Ira Epstein. I thank you for listening. I'll catch up with you all on Monday. Take care.